Do you need to raise capital for your real estate deals? Well, in this video, I'm going to cover the do's and don'ts of raising capital in real estate. After literally raising millions of dollars for fix and flip and multifamily real estate deals, I've compiled my learning lessons in this video on what to do and what not to do. So let's dive into the first do's of raising money for your real estate deals. Do number one, do ask everyone you know when raising money for real estate deals. One of the biggest mistakes I ever made in the beginning of our business was thinking if I just talked about my real estate investing companies and posted it on my social media, people would be begging to give me money for deals.
A few moments later.
Well, guess what? The money never came pouring in. It wasn't until I took a different yet direct approach to raising capital that then the money came flowing in. Don't make my mistake and just tell people what your business does. What you need to do is explicitly tell people you're looking for more investors and that investing in real estate deals with you is a great opportunity. See, when we finally started talking to people about our direct need for more capital, the doors swung open and the money finally did come pouring in. So be sure to post on social media that you're raising money for real estate deals. Post about the great money you're able to make from the real estate deals, and post that you would love to have more investors lend or partner with you to make great returns as well. Also, start asking people you are involved with in real estate business, such as realtors, lawyers, insurance people, commercial agents, appraisers, and pretty much anyone involved in real estate. Talking to your real estate network is the best place to begin because a lot of these people are already familiar and comfortable with real estate transactions. Do number two. Do have an investment pitch when raising money for your real estate deals. When you meet a lender, whether they are a private money lender, hard money lender, banker, or joint venture partner, they will pick up rather quickly if you know what you're talking about and have done this before. Make sure you go into each conversation knowing how to sell yourself, your business, and are comfortable with the idea of others giving you money. Most lenders who lend on single-family real estate investments don't lend because of a good deal. They lend because they feel comfortable with the borrower. Your confidence, ability to speak intelligently on the business model, and showing you understand how the transaction works is much more important to a lender than your level of experience and cash in the bank. Be sure to always inform your private money lenders of the 3 levels of security you provide with each real estate deal. The 3 levels of security are, number 1, the mortgage. No one can take any money from the sale of the property until the mortgage is paid off first. This means that the lenders, those you raise money from, will be paid back first before you see any profits. Number 2, the promissory note. This shows them that you are promising and willing to pay them their money and interest on the deal regardless if you make money or not yourself. And number 3, the insurance policy. If something happens to the property, such as a fire or terrible negligence by the contractor, the investor will be able to get their money back from the insurance policy. In conclusion, to do this do of raising money, you need to learn how to sell yourself first before talking to any investors for your real estate deals. This is of the utmost importance, and knowing the 3 levels of security will help you do this. Do number 3. Have a real estate investment deal summary prepared when raising money for real estate deals. When trying to get and raise money for a specific real estate investment deal, make sure you have all the details figured out and packaged nicely in a form of an investment deal summary. The summary should include details about the property, the size, the current condition, bed and bath count, square footage, photos of the property, a scope of work, and detailed budget that explains what you're gonna do to the house. There should also be at least 3 real estate comparables explained in detail why they support your valuation for the house you are buying. If you're working with a new real estate investor or an investor not familiar with the area, be sure to explain as to why you are buying in this neighborhood and why this neighborhood or city is a good investment. The real estate investment deal summary should also have a detailed breakdown of the deal numbers, how much you are buying the property for, the cost of the renovation, the expected holding cost, the sales price, and what you expect the profit to be. Also, it is extremely important to dedicate a section showing what terms you are offering to an investor and why that is a good rate. A few examples of this would be It's a low-risk deal. It's already under contract with an end buyer because you're experienced or your partners are experienced. Finally, show the investor how much money they'll be making with you once the investment is complete. Now, let's dive into the don'ts of raising money for real estate deals. Don't number 1, don't depend on one financing source to close the deal. This rule applies if you are working with new lenders on a real estate deal, whether they be hard money lenders, private money lenders, banks, or joint venture partners. Anytime you are working with a new lender, they will always take longer at first to get you approved and get a deal closed. Sometimes the delays are extremely long and can cause you to not close on your deal. Make sure you have several backup plans, multiple lending sources when you are funding a deal with a new lender to ensure you don't lose a deposit or any relationships. The moral of this principle is that you should find different financing sources, whether they be private money lenders, hard money lenders, banks, or JV partners, and see what it takes to get approved with them before putting a deal under contract with no way of funding it. If you have your financials in good order and are extremely organized, it should be easy to get approved with one of these lenders. Also, if you are able to find a strong, safe deal and have your financials in order, lenders will fight each other to give you money for the deal. Don't number 2. Don't come off as needy or desperate when raising money for real estate deals. I cannot lie and say I've never come off like this when raising capital, and let me tell you, it has never worked. When I first started flipping houses, I put too many under contract and I was afraid of spreading ourselves too thin with hard money. I called several people I knew and asked them to lend on my deals. And when some of them showed initial interest, I followed up way too aggressively and never was able to get a single dollar. Don't get me wrong, you definitely need to sell someone on lending to you, but if someone is not ready or comfortable, exerting an undue amount of extra pressure will only scare them away. The best strategy I use is to walk away. Meaning if someone is not comfortable lending money for a real estate deal at this time, then I walk away and come back to them later. No need to force it. If someone doesn't want to lend after they said they would be interested, I just put them on the next email blast highlighting our other investor successes who we did raise some money from. Guess what usually happens? The lender that I walked away from comes back wanting to invest with me because others already took the risk and survived. But this time when they come back, they will get a lower interest rate because the high risk takers came in first and got better returns. Don't number 3. Don't try to close quick with new investors when raising money for real estate deals. One of the biggest mistakes I see new investors make is being too aggressive on closing timelines when they don't have everything lined up to close. If you overpromise a closing timeline to a seller and then go to a new lender with a short timeline, many of them will simply turn you down because they're not trying to close your first loan on such a quick timeline. This also goes hand in hand when wholesaling. We get many new wholesalers that overpromise a quick closing to sellers and then push us to close in a week when our lenders may need at least 2 weeks to close the deal. Or our closing attorney might be backed up on getting title and not be able to close the file that quick. Whether you are a new investor or a seasoned investor, you have to treat each lender, especially private lenders, with extra care. It doesn't matter if you are in an expensive market or a cheap market, even borrowing $50,000 from a private lender can be most, if not all, of their savings. So you need to understand where their mindset is coming from and respect the fact that they may need some time to make a decision to give you money. All right, now for one last do when it comes to raising money, and this one is only borrow money when you know you can perform. This is the last but most important principle. Sometimes when the real estate market is going well, new investors and lenders will throw their money at anyone willing to take it for a deal. I personally know people that took more money than they could handle. This led them to getting overwhelmed and falling behind on projects, and even led to more money needing to be borrowed to cover overages on previous projects. Understand what kind of projects and deals you can handle and how many of them you can handle at once. Growing is important, but growing at a manageable pace is even more important. Don't get too big for your own head and end up owing a ton of money for projects you can't complete. If you're a new borrower, lenders can require you to personally guarantee these loans, meaning you can literally lose it all if things go south and the market changes or you mishandle a project. This is why it is important to learn from our previous mistakes as you move forward. Now we actually put together a free PDF of these do's and don'ts so you always have them on you. And so you won't forget them when you're raising money for your next real estate deal. All you need to do is click the link in the description, enter in your info, and we'll send it right over to you. Now, if you enjoyed these tried and true principles for raising capital for real estate investment deals, please go ahead, like, subscribe, and hit that notification bell so you know when our next video comes out. Also, leave a comment below about any other topics you'd like us to cover. We'll be sure and try to get to it in the future. Time to raise that money for your real estate deals. Talk to you soon.